The title of this video is How Low Will They Go? And before I get into that, I want to address two phone calls that I had, one last night and one this morning. One was from Gabe, and Gabe brought to my attention that nowhere in the past history have we gone into a recession or a depression without an inversion of the yield curve. And what that means is where the long bond, the 30-year bond, is actually paying less than the short-term bond, the 10-year Treasury. And I said to him, first of all, I don't necessarily believe that we are going into a recession. I believe we are going into a correction. And I think that correction is not being driven by the market as much as it is extenuating circumstances. And I've elaborated on those circumstances relative to China, relative to the pumping of $3 trillion into the economy, and then the lack of an additional money into the economy to help those in need, and then the Fed coming in and basically saying that interest rates are going to stay below one, and then the interference or the involvement of the White House and government agencies in the development of companies. This is all unprecedented, and it is. And then the other thing that really raised a red flag to me was the overwhelming overvaluation of IPOs, the last one being Snowflake. And so that is when I went to cash, 50% cash. I got another phone call this morning from Corey. I've spoken to Corey, a nice young lady from California, LA, I believe. And she said was asking, why wasn't I going to gold? Why wasn't I going to the gold miners companies because if this does in fact crash, gold will spike in price as everyone runs for safety, and the dollar is devaluating, so there isn't any safety there. Corey, my feeling on that is, number one, I didn't go 100% into cash because I'm not sure this is going to happen. These are unprecedented waters. We've never sailed on waters like this. I just went to a cautious position. I didn't liquidate everything. I brought it down to 7 stocks that I'm comfortable with in the future. I'm not so comfortable with them now, but I've reduced my holdings by 50% in anticipation that if my hunch is right, that I'll be in a position to buy into those same stocks, those same 7 stocks that I hold at a lower price, which will then give me a greater return. And again, I want to reiterate, if I totally believed that this was going to happen, I would have gone to 100% cash, but I didn't. So that is why I'm not going to go to gold, because I am not convinced totally that what I think is going to happen is going to happen. The other thing that I think we need to recognize is that some stocks aren't going to go as far down as others. Those I think that will go down substantially are those that do not have a future in our future, and are going to run into financial difficulties in the next 3 to 6 months as a result of those things I just mentioned. We have a tremendous problem with debt. We are facing unemployment. At the same time, the states are not collecting taxes, and their obligations for pensions and teachers' pensions and railroad pensions, they're all dependent on high interest rates. They need 8%. They haven't gotten 8%. So and then their taxes are not there, so they're being put into a pinch. These are all things that are weighing on my mind that are saying they're going to have to be reset. So I am of the belief that my stocks, the ones I want to invest in, I really don't care about the other ones because I'm not going to invest in them. I'm not going to invest in the shiny objects, and I'm not going to invest in the stocks of the past era. I believe that once this is all behind us, we will move into the fourth revolution, and the stocks that I own will do well. With that in mind, how low will they go? I mentioned in a prior video that I believe they will retreat. And again, I'm talking about my 7 stocks. I believe they are going to retreat into their prior trading channels. Historically, I can see when I look at their charts that they often spike up out of their trading channel and then retreat and come back into it and sometimes drop below it. I want to show you this. I want to show this on several stocks that I'm watching and show you exactly what I mean and where I'm looking to buy back in. If, in fact, what I think is going to happen happens. If it doesn't, I still have 50% of my investment in them. So let's look at the charts. Okay, I want to share with you visually what I'm talking about, getting back to the channel that they traded in. This is Amazon, and as you can see, Amazon traded in a channel, and this goes back to roughly 2014. And as you see, it comes out of that channel on occasion and then comes back down, goes out, but moves generally back into the channel at some point. It has times when it spikes up out of it. What I'm saying is the coronavirus has created another one of those spikes. And there you see it. It spiked out of the channel, and now it's coming back towards the channel. So it's my theory that Amazon will follow this channel back down and will reach a price somewhere down here. Now, what I told you is right there at $2,187.97 is a gap. And that's the target price that I would set on Amazon for if this crash comes to pass as I think it will. So that's what I'm talking about as it comes back into a channel. Now let's look at Apple. It's probably even, well, let's look at its channel. We can see it has traded in this channel for quite some time, going back all the way to 2010. And at times it spikes up or spikes down, but it always comes back to the channel. See, even here, came back to the channel. Now we see it up here, and we see it's broken out of this spike channel. There is a gap here at 99.54 or thereabouts, but that's not actually back into the primary trading channel. The primary trading channel is here. And there is a gap that potentially will be my target price of $62.01. That is a substantial drop. We also see there is a gap here at $99.94. I'm pretty confident it's going to hit that one. I don't know if it will hit this one, but if I'm a person who believes in history and believes that stocks will come back to their trading range, that's my price. Now, what I'm willing to do is sit and wait. I'm willing to sit and see what happens in November and then see if if this comes to fruition. This, again, is Microsoft. And again, it spiked, it came back. And historically, you can see that happens. They go up, they go down, they've come out, but they come back to home. They come back to the channel that they've traded in the past. This is where I believe, here we have a gap at 191. It's currently trading at 200. There's no doubt in my mind it'll fill that gap. Will it come all the way down here? I don't know. But again, I'm willing to wait and see what happens in the whole economy, in the stock market, until after the election, and after the virus and is found. There looks like there's a gap right there as well at 157 for Microsoft. Let's look at the big one. This is Tesla. Okay, here we are. You can see it spiked out of the spike channel and came back. And as history says, it will go, when it goes out, either up or down, it will come back. The question is now, will the market bring it back to somewhere in here? There are plenty of gaps for Tesla. There's one at 250. There's another one at 228. It's my belief Tesla will find its way back in here. Not because Tesla is not going to be the car of choice, not because Tesla is not going to develop a battery that's going to change our world. It's because of the broken market. It's because of what's going on in the market, and the overall momentum of the market will bring it down to these levels and bring Tesla back into this channel. That's what I believe. So let's go back to the desk and take a closer look at this. Okay, let's get out the whiteboard, which one of you suggested I get and use to illustrate my points rather than just throwing numbers. These are the 7 stocks that I own. And what I'm looking for is a correction, not a crash, I guess, or not a recession, but a correction. Apple is the first. It's currently selling as of Friday at roughly $107. My target price is a 35%, 36%. And I don't want to use the word correct. Yes, I do. I want to use the word correction at $69. And you saw on the charts that I showed you, that would put us back in Apple's trading channel. That is my target price. Facebook, 252, coming down to 240, merely a 5% correction. I'm also then going to be looking for a gap inside that channel. If I see it go down to 240, I'm then going to look for a gap that is the exact price I want to buy. Now, if this happened next week, would I buy Apple or Facebook at 140 or where the gap is? Probably not. Probably I want to wait until November 5th and see what happens and see how this all cleans up and the dust settles. Same with Amazon. Amazon's currently at $29.33. I see it available at a nice price of $25.57, roughly a 13% correction, and that will put it in its channel. Google actually is already in its trading channel, but I see the good price at $12.99. Microsoft needs about a 12% correction, which would bring it from $198 to $174. Again, I would look for a gap. Square, $142 to $117, a 28% correction or adjustment or a reset, whatever you want to call it, and that's where I would look to buy it. Tesla, I'm looking for a 31% adjustment, reset, from 435 down to 300. There are plenty of gaps with Tesla. Tesla went crazy. Tesla, I believe, will pull back. And again, if it doesn't, I'm okay. Tesla is my largest holding. If, in fact, Battery Day comes, I think it's on September 22nd, and the roof explodes out of Tesla, I'm okay because it is my largest holding. But if it doesn't, if it is disappointing in some way, or if something happens that creates a reset in the stock market, I've got 50% cash. I'm not in gold. I'm not in the miners. because I don't feel as comfortable with that scenario as the one that I am operating under. And I really want to emphasize that. You work from a plan, whether you're building a business, whether you're building a football team, whether you're training for the Senior Olympics, you work from a plan. You sit down and say, okay, this is what I need to do between now and then to achieve my goal. And then you stay with the plan until you have a reason to adjust from the plan, because things will change. You can't run on Saturday because it's raining. So you run on Sunday. You adjust as you go. I was called this morning a flip-flopper. And I know what he's referring to, he or she. I changed my mind. I reserve the right to change my mind as I gather more information. I would be a fool not to. I would be a damn fool if I said, okay, that's good information, but I'm going to ignore it because I know I'm right. I know I'm right. No, that's a fool. You gather wisdom. It doesn't it's not all there. You have to work at it. You have to read. You have to educate yourself and then act accordingly. Okay? Flip, flop, whatever you want to call me. If this isn't the channel for you, that's okay. I am not going to get mad. So, if you're not subscribers to my 7 stocks and you believe you have other stocks that are your future, do what I did and get that chart and find their trading channel and see if they're still in it, if they're above it, or if they're below it, and create a plan. Create a plan of how you want to have your investments move forward. Then continue to educate yourself. There's some wonderful education going on in our tribe's village. Our village is our Discord. Our Discord is where Gabe teaches classes on retirement investment vehicles, as well as he has done one. He knows a hell of a lot more about options than I do. We have people in our tribe who show up at our Discord and educate our tribe members. I encourage you to go to Best of Us Investors, subscribe to my morning letter, and in my morning letter you will find a link to the Discord, which is our village. The other thing I want to mention is Dave wrote me and basically said I needed to be transparent. I've mentioned this before, and I need to be more timely. I can't do that. This is Saturday. This video will not air until Monday, and that's because it has to be uploaded, it has to be edited, and then it has to have a thumbnail, a description. It's a process. That's the time that I invest, and I'm gaining help in that, so it might speed up a bit more. So my new commitment to you is that I will do Twitter videos. I did one this morning, basically announcing this video and what it will be on. That is how, if you want current, up-to-date information, go down into the description, subscribe to my Twitter account, and look for something at least once a day. That's what I'm going to try to do. My hair may not always be washed. I may not have bathed, but you can't smell my breath or my body through this video, so I don't care about that. But my commitment to you is to give you what I'm thinking as quickly and currently as I can, because Dave asked for it. And if you want something from me, ask. If I can't give it to you, I can't give you personal financial advice. I can refer you to a financial advisor, but if I want a one-way ticket to jail, that's me giving you personal financial advice. So we won't be doing that. And please don't give me 4 letters and say, what do you think of this stock? And it's a penny stock. I don't think about penny stocks, so I don't think anything about it. And I don't have the time, and I don't have the inclination to learn more about it. I want to invest in companies that are going to change the way I live, that have a good business plan, who have a strong balance sheet, and are thinking into the future. If you don't know what I'm talking about, thinking into the future, go into the subscription or the description and find this book. Read this book. It will be like you were reborn. It will tell you things you had no idea that are coming and give you a open window into what the future looks like, and then you'll understand why I don't need more than 7 stocks. Now, I will. Once this whole thing settles, there are some companies that are mentioned in here that I want to get back involved in, Uber being one of them. But I'm dealing with my plan for the next 3 to 6 months until everything settles down and the stock market is running as it should. Right now, I believe it's broken.